Alrighty, so we got a red day recap on CAD/JPY. Let's get into it. Let's break it down. So let's start from the daily chart and let's work our way down. All right, so daily chart, what are we looking at here? Daily chart is clearly bullish. It's operating within a bullish market structure at the moment. We're consistently putting in higher lows. We're consistently tagging these highs. So this daily chart on CAD/JPY, it's clearly bullish. Okay, clearly bullish. So we were trading with the tide. We were trading with the overall trend. That's a plus. 4-hour chart, we had this higher time frame level right here. See this? This is your 4-hour bullish order block. So we traded down, had this displacement lower down into this higher time frame level of support. So we got that 4-hour level that we've been just chopping around for a little while at this point. And this morning during London session, we had a nice move higher. So we did have the influence of London session this morning, which is a plus. We had this move up higher with our shift in market structure, taking out these highs right here. It also left your little fair value gap, our fair value gap confirmation that we absolutely need for entries. So we had a higher time frame level, check. We had a shift in market structure, check. Third London, check. And also we have this. This is a 1-hour bullish order block as well. See that? So yeah, those are our points of interest on this thing. Also, I want to go back to the 4-hour real quick. On the 4-hour chart, so we did have this displacement right here, but this also created what is called a fair value gap. So fair value gaps, they serve as draws on liquidity as well when they haven't been tapped into. This area is serving as a draw on liquidity. That's where I wanted to take profits. Okay. I wanted to see a draw up, trade up into that imbalance, and that's where I would have got out, right? Because it wasn't efficiently delivered. This portion of price action was not efficiently delivered, and price does not like to leave areas like that. So where did I end up getting in this at? Well, I grabbed it as it was coming down into this 1-hour order block, and then I added to it on this second leg lower back down into the 4-hour. Now, one thing I didn't, so this thing, it's one of those cases where my stop was a bit too tight on it, or at least my stop was a bit too tight on the second entry. The first one was all right, but the second entry, that's 10 pips. So that's 10 pips is a bit too tight for me. That was one thing that I could have done better. Give it a little bit more breathing room. And also it's worth noting that the vast majority of the time, so this is one for your notes. This is a really important point that I want you to take note on. The vast majority of the time, the best plays, they will take liquidity from the previous session. So for example, the best place to keep your stop on this was underneath this low. And I know you're thinking, well, yeah, that's easy in hindsight to say, but it's the same pattern. I mean, it occurs over and over again, because this low right here, this was during Asian session. And what low did Asian session take? It took this right here. What is that low? That low was previous. That was New York session, the previous on Friday. So see how it took New York session, sell side liquidity, and then boom, you get a nice move to the upside, that displacement to the upside. Those are the best places to keep your stop. I know you might be thinking, well, what about the fair value gap? You have a fair value gap right there. See that? That's where it started at. We had this one up here, and that's where I had my focus mainly. But the best place to keep your stop would have been underneath this low, because when you did, that's where you had that first fair value gap, and it's where you took liquidity. Okay, see that? See how we took that liquidity, and then we had that. That's like where the move originated from. And then you get that pullback and the 61% retracement. You could have kept your stop right there, or just right below that low, and you still would have been in it if that was how you played it. But I kept my stop right below this low, because we had this fair value gap right here. I figured, hey, it shouldn't break below that low, and what you know, it ended up coming down, tagging those stops. And so yeah, that was how I mistimed it this morning. And that was one thing we could have done better. One thing we could have done better is sticking with the low that grabbed previous sessions liquidity. That's always best. Okay, sure, we want the fair value gap. We absolutely want the fair value gap. That's where I like to keep my stops, below fair value gap lows combined. But it's even better when you have it grabbing previous session liquidity. So like we grabbed this liquidity right here. See this low? It didn't grab previous session liquidity. It tapped into an imbalance, but then it just rocketed up. It didn't grab any like major liquidity. That makes sense. It didn't grab any major liquidity right here. This one did. This one didn't. This one did. This one didn't. Okay. So yep, that was my trade today. Overall though, even though that's one thing that we could have that I could have done better on it. Overall, it was a solid play. We had our higher time frame points of interest, larger time frame trend. We were trading with a larger time frame trim. So still overall, it was still a nice setup. If you enjoyed the video, make sure you leave a like, subscribe to the channel. I'll keep it coming.